Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss how AI is reshaping investor expectations, what history teaches us about technological disruption, and why maintaining perspective matters for long-term investors. 15 years ago, a prominent venture capitalist wrote that, quote, software is eating the world. What he meant was that many traditional businesses were being transformed into software ones. Older manual processes were being digitized. This is relevant today as many services are transformed again with AI. We've seen sharp market sell-offs followed by quick recoveries in technology stocks as investors try to assess the implications of AI. What triggered this recently was the release of new automation tools that can perform tasks previously handled by specialized software, along with questions about whether massive AI infrastructure spending will pay off. Over the next few minutes, we'll explore this topic and how investors can maintain perspective. Let's look at how technological disruption has unfolded historically. The current uncertainty around AI may feel unprecedented, but similar patterns have played out before. Think about how software has evolved over the past few decades. From programs you purchased in a cardboard box to cloud-based services that now underpin how we work, communicate, and shop. In every wake of innovation, markets must determine which companies fall into the, quote, old economy and which companies belong in the, quote, new economy. AI continues this trend by changing how services are actually created. However, even the most transformative technologies don't eliminate the need for specialized expertise. AI systems will still require access to the best data, reliable platforms, and unique domain knowledge. It's also worth maintaining realistic expectations about the pace of change. While AI companies have predicted major breakthroughs for years, recent evidence suggests that progress in AI training has slowed somewhat. That said, what current systems can accomplish is already remarkable and clearly enough to reshape investor expectations. Beyond AI, there are other economic factors investors should consider. The labor market has weakened since the middle of last year. In December, job openings fell to their lowest level since 2020, and job cuts in January reached their highest level for that month since 2009. While there's no direct evidence that these cuts are AI related, these trends affect the broader economic outlook. History shows that major technological waves eventually create more jobs than they replace, but the transition can be difficult. That said, other economic data remain healthy. Consumer spending continues, supported by household wealth near record levels, and inflation has held steady below 3%. So, while there are challenges, there's also reason to believe the economy could continue growing at a healthy pace. So, what does all this mean for portfolios? Recent volatility underscores that asset allocation matters more than any single trend. The information technology and communication services sectors have delivered strong returns in recent years, but they're also known for experiencing large swings. With stock market valuations near historically high levels, investors have been rotating into other sectors like consumer staples, energy, materials, and industrials. This possibly reflects markets becoming more selective and focusing on opportunities beyond just AI. Ultimately, today's AI trends should be viewed in a broader context. If past cycles are any indication, markets will likely over and underreact to these trends in the short run. History shows that those who stay patient and properly invested will be best positioned to achieve their financial goals. We hope you found these insights helpful. If you would like to learn more about any of these topics or discuss how they apply to you, please don't hesitate to reach out. We look forward to speaking with you.